a few of you here, so thank you for joining us. I'm Chris Jameson. I head up our product management organization at Bank of America within our transaction banking business. So within that, we've got payments, receipts, liquidity, commercial card issuance. We also have merchant acquiring, physical banknotes. There is still cash out there, and we're still supporting that. We represent the Federal Reserve globally for dollars in the market. So quite a broad remit in terms of what we do at Bank of America. We were really excited to be part of this particular topic, unlocking global markets, because we are a global bank with global presence, global capabilities, and we think that we can be very relevant to the conversation, and hopefully you'll agree as we go through some of the topics today. So I'm going to spend about 10 to 15 minutes walking through a little bit about what we see in the market and we hear in the market from our clients, some of the tools and solutions that we've been bringing to market for those clients and merchants. Not all in the C2B collection space. In fact, we've purposely steered away a little bit from that because you're hearing a lot of that over the course of these few days. A little bit more of a focus on B2B and outbound payments as well, which for many of our merchants stroke corporates is a really, really important topic as well. As Chris mentioned, there will be plenty of time for Q&A during the Slido sessions in the panel discussion. But if you do want to ask me a question afterwards, I'm around later today. I should be pretty easy to spot. I think I'm the only person in the conference with a tie on. So you can come and find me. Actually, no, I'm the second person, but the other person was a waiter as part of the hotel. So come and have a chat. So maybe just a little bit about merchant payments at Bank of America and what we do. We're quite a significant player actually in the merchant space. So we process approximately 9 billion card transactions every year across over 220,000 merchant locations, and a pretty big number in terms of what we process in terms of our acquiring book. In Europe, we're also more significant than many people would realize. We do go a little bit under the radar. We work with some very significant merchants, which gives us reasonable volume in the region. So we're processing about 440 million transactions in Europe across 20 countries for about $18 billion. And in Europe, we're across a number of countries. Globally, we're really US, UK, and Europe. So 20 countries for merchant acquiring. On the top right, you'll see that we've got some strange specialities that we focus on. We've got one of the big Premier League clubs that works with us. We've got the PGA Tour, for example, that uses us as well. And as you see on the bottom right, we provide merchant services for half of the top 10 retailers in North America. So that gives us a really strong volume play for us to bring benefit to other retailers and other merchants. But I guess to again put this into perspective, this is specifically around merchant acquiring. In our payments business, we process around $1.6 trillion worth of payments every single day. And that's across 200 countries, 150 plus currencies. So as we're thinking about the other side of treasury in terms of payments, we've got a really strong capability there in terms of being able to support currencies, outbound payments, and certainly the machine and the volume to support that. So as we think about beyond merchant and think about global treasury and global treasury services, there are a number of really key themes that we're seeing that treasurers are focused on or having to focus on. And they're split across these 6 main areas as we see them. So first up, there's behavioral change. Consumers, it's very consumer driven. Consumers want optionality, they want speed, they want simplicity, they want a really good user experience. And so all of our clients are focused on how do they make that a better experience for the end user. There's been an awful lot of geopolitical challenge in the market for people to deal with, for our clients to deal with. Pandemic, obviously, Russia-Ukraine crisis, economic pressures. We think about the situation we find ourselves in. With the inflationary pressures on many of our clients, working capital becomes an even bigger requirement, and that's where we come in. Everything that we do in transaction banking is around working capital benefit, whether that's on the receipt side or on the payment side. Socioeconomics, so we're seeing a mixture between globalization and then other people thinking about nearshoring or onshoring as well, and that is creating a lot of thought processes around our corporate clients and decisions that they're making. unbanked penetration as well, so trying to reach those unbanked individuals. Big focus on central bank digital currencies as a potential way to reach that unbanked population in certain markets around the world. We can't go through a conversation, I think, in the payment space without talking about regulation. PSD2, obviously creating the open banking world, but we are dealing with more and more regulation every year, every day, every year. And my team, as we think about product development, product management, more and more of our time is making sure that we are keeping up with the regulations so that we can support our clients in the markets where we operate. But as a merchant that is going into new markets, it's important to then have a partner like us who has an understanding of the local regulation and can guide you through that as you go into those new markets. Technology, clearly a huge focus, innovation, automation, and all that comes with that. And I'll touch on a few things that we've done in that space. And then the change of business models that we're seeing, the drive towards e-com, the gig economy, many sort of traditional corporates that we would have worked with trying to move to that online environment. And so we're helping them move along that continuum. So if you think about the evolution of payments, checks have been around since actually the 1600s, and we're still using them today, unfortunately, in some markets. But that gap between the payment message and settlement has really been contracting over centuries, and certainly even more so in recent years. You think about faster payments in the UK that came around in 2008. Not really a real-time payment scheme. The clue's in the name. It's faster, but not real-time. Then we moved into things like real-time or same-day ACH in the US, Zelle, which we'll touch on a little bit later, peer-to-peer payment tool in the US, which is becoming more interesting for corporates and merchants, and then into real-time payments and digital assets and crypto. So that evolution of payments, it's all around getting a bit more speed and simplicity, and that convergence is really important between the messaging and the settlement. So then if we drill down into sort of the more recent years of that timeline, paper, unfortunately, continues to be there. So cash and check continues to be an important way for people to pay. I think it was the EU were mentioning that cash continues to be the most important point of sale transaction that they have. Yeah, it has reduced, but in terms of number of transactions, cash is still prevalent. It's decreased from, I think, 72% of all POS transactions were cash in 2019, down to 52% last year. So that is moving in the right direction. And the other interesting thing is that whilst the total volume of transactions still leans towards cash, the value has now flipped. So for the first time in 2022, there was more card value being processed at point of sale than cash across the EU. But unfortunately, they remain. Certain markets like the Nordics, they've been able to get rid of both of those. But we as a bank need to continue to support where our clients need us to do so. You then look at the 90s in the electronic space. You had obviously the card schemes that started to provide electronic payment. You then moved into the 2000s and 2010s, and you got the tokenization world starting to come in with Apple Pay, Samsung Pay, et cetera, but very much still based on those card rails. In the online space, we started to see Zelle be created, and things like Venmo, Visa Checkout, PayPal starting to get a bit more prevalence online. And then you move into the present day, and clearly we've got more real-time payment schemes, which again I'll touch on in a second. You've got the rise, and some would say slight fall, of buy now, pay later. Although I saw last night on the news wires that Apple Pay Later has just been launched last night. So Apple tend to do things very well. So let's see where that goes in terms of their offering on Pay Later. And we can't ignore at the bottom right, so the digital asset space and what's happening. Despite the fallout post-FTX, it's still an important asset class and an interesting space to focus on. Personally, I've downloaded things like Coinbase, MetaMask to use myself. I want to make sure I understand them before my kids start using them. So it's a helpful thing to do, just have a play, download those and have a play. But I guess the key here is all of this has been moving towards convenience. You know, we moved from carrying bags of gold around to checks back in the 1600s for convenience reasons, and that continues. And so everything that we're seeing here moving towards that stage 3 in present is really all about that. I think one example of convenience, we have an online banking app that our corporate clients use. And pre-COVID, it was used a little bit by corporate treasurers. Yeah, nobody really saw themselves using an app for corporate payments. So we had 0 days on our app where there were $1 billion worth of payments approved on our app. You fast forward to 2021, and we had 108 days where over $1 billion worth of payments were approved on our app. Okay, so that shows you that convenience is not just in the consumer space; it's also in the corporate treasurer's mind as well. I touched on real-time payment schemes, and I think this is a really topical subject because the ISO migration has just happened in a number of clearing systems over the course of March. Not a very sexy topic, but a really important topic. The ISO migration is foundational in the ability for real-time payment schemes to function and for interoperability between those real-time payment schemes. So if we do want to get to a point where you're going to have cross-border real-time capability and interoperability, then ISO is a really important enabler for that. So it's just gone live for Target 2 Euro 1 in Europe. Swift CBPR Plus cross-border payments has also gone live, and it's going to move ahead for CHAPS as well in June in the UK. This is just a selection of some of the real-time payment schemes that are out there and available. There are around 56 countries now, and since I've been on stage, that may have increased to 57. It is changing quickly, and that's up from 14 countries just 6 years ago. So that prevalence of real-time payment schemes is going to be a really important play for us as a bank providing services to merchants and corporates around the world, the ability to pay faster, to pay real time. So thinking a little bit about some of the stuff that we're doing in Bank of America. First up, bank and fintech are not enemies, they collaborate. And I think that's a big shift from maybe 5-6 years ago. Pay by Bank is a great example of that. We've partnered with a company called Banked in the UK to create a Pay by Bank tool for our merchants. So to enable an additional payment type at checkout. We started in the UK last year. We've gone live now in the EU this year. So again, really nice tool, nice user experience for the consumer. And then for the merchant, no need to keep hold of that card data. It's a lot more simplistic than that. You don't have to think about all the data protection for the consumer information. So a lot of benefits that can come from this. Oh, there we go. So that's one example of really strong collaboration between fintechs and banks. I should have said actually that on this slide, we could have had maybe 100,000, 200,000 logos on here. There are that many fintechs out there. And so one of the key things about working with a global bank is we will cut through all of that noise, those hundreds of thousands of fintechs that are out there, and choose the ones that we think are viable for us and for our clients. And that's, I think, a big differentiator for working with a bank. Another example is global digital disbursement. So again, this is not on the receipt side, this is on the payment side, but it's using alias-based payments to deliver solutions for corporates. In this case, these are corporates that are looking to pay individuals, and instead again of holding bank account information on the Zelle network, for example, all we need is the dollar amount, we need their email or their phone number, and the date that you want to pay them. And we will reach out, we'll see if that person is already registered on the Zelle network. If they are, great. If they're not, we will prompt them to sign up, one-time easy sign up. And then obviously if the person decides that they don't want to get paid for whatever reason, then that will lapse after 14 days, after a few reminders, and the money goes back to the merchant. So that's one example, and the same thing then for PayPal internationally, payments out into a PayPal wallet as an example. Okay. Instant cross-border payments, I don't have enough time. I'm not going to spend a huge amount of time on this, but this is where we are using Ripple as a partner to support cross-border payments in a more real-time way with less deductions that you see through the traditional correspondent banking networks. And again, an interesting angle in terms of trying to create cross-border real-time in the absence of having those real-time payment schemes talking to each other. Virtual payables direct. So this is for merchants who are looking to pay suppliers, but those suppliers do not accept card today. So we've developed a solution that will go live later this year, where we're bringing 5 different elements of what we do as a bank together to create that solution for clients. Great working capital tool in the absence of a supplier that accepts card. So we issue a virtual card. We then acquire that virtual card through our merchant acquiring tool. We use virtual account management to segregate those payments. FX for an FX component, and then an outbound payment to the beneficiary. So supplier gets paid on day one, merchant gets the benefit of the working capital through the card rails. It's a win-win for both parties involved. So again, another little bit of innovation that we're focused on. We'll talk a little bit more, I think, in the Q&A about FX and some of the challenges around FX. We've got a number of solutions that help solve those issues, so I'll not spend time on that now because I think I'm already overdue. And I guess just to summarize then, in terms of banks as a partner, obviously there's been a lot of noise in the market around the banking sector, and certainly there's been a flight to quality in terms of bank counterparty risk. We, as Bank of America, really are a tier 1 global bank, so that strength and stability is something that merchants, I think, rely on a lot from our perspective. We also have deep, long-standing relationships, so our average relationship length is 10 years. So clients that come on board, they stick with us, they like the servicing that we give them. And some of the ideas that I've just walked you through show that we've got a really strong breadth of solutions. We spend about $10 billion a year on tech investment, and about 3.5 of that on new tech ideas. So we're continuing to invest and develop ideas for our corporate clients. So with that, I'm going to stop. Hopefully that's given you an insight into what we do at Bank of America and some ideas to food for thought. And I'll hand back to you, Chris. Yeah, thank you.